Leslie Samuelrich is the CEO of Green Century Capital Management, a true leader in the ESG space. Leslie, it is wonderful to see you today when we are thinking about ESG reaching a tipping point, a pivotal moment in the industry. Is this true? What does it mean?
Thank you, Daniel. Thanks for having me this morning. Well, I think it means that our message is finally getting through. You know, Green Century was started over 30 years ago, or almost 30 years ago, by a group of environmental leaders who wanted people to have a way to invest in an environmentally responsible way. But back then, the catastrophic ramifications of climate change weren't fully understood. But now companies we see are reacting to public perception in adopting greenhouse gas reduction goals. Investors are looking at climate risk and going fossil fuel free. The second point is that the talk about ESG and values-based investing sacrificing performance is disappearing. It's not entirely gone, but even this conversation proves that ESG is now being looked at as a legitimate tool in the toolbox. Having said all that, I think Europe is ahead. The US is approaching a tipping point, but for it to really be there, I think mainstream investors need to do a few things, which includes offering more than just a bare bones ESG option, having companies really striving to get the higher ESG rating because they think it's integral to their success, more authentic products coming on board, not just a greenwashing type of event. And I don't want to see any companies using an excuse like the current pandemic to silence shareholders at their annual meetings, which is a problem here in the US right now.
Yeah. So we're in a hopefully short-term crisis. And how do you square that with long-term investment thinking?
That's a great question. Here's my take on it, is that investors need to start embracing a broader understanding of what constitutes financial materiality. And one of the ways to do that is to really embrace looking at climate risk and not just look at what's immediately material, but encompass factors that create the longer term shareholder value. And we need to reorient how we think about risk and what constitutes it, not just, again, in the short term, but in the long term. And then finally, I think all investors really need to practice active ownership. I know you've written a lot about that and responsible investor, but it here means that, consistently voting on shareholder resolutions that advance climate risk and climate reduction, filing resolutions here in the US, or joining in investor engagements on it for companies that haven't set those targets that need it. And then finally, sending some market signals that those companies will not be as highly rated if they don't really address it.
What's the message during this period to clients? What are you telling them?
We are telling them that we are still here to help you invest with your values, as we have been. We are telling them to don't let the outdated notions around performance stop you from making the change. In fact, in the first quarter, a number of ESG funds, including 2 of Green Century funds, were pulled out in media reports about how we weathered the downturn better than average funds and actually could deliver better performance because we were looking at these factors and how companies manage their risks. And then we always remind investors that we're firmly fossil fuel free. We're the first fossil fuel free mutual fund here in the US, and that avoiding the energy sector is a great way to not only align with your values about climate change, but also avoid the sector that's not only been the worst performing in the last year, but in the last decade.
Yeah. So taking a step back, what does the industry look like going forward after this crisis?
Well, I don't have a magic ball, but here are a couple thoughts on it. I think some of the trends will continue. So the consolidation that we've seen, where especially the larger players are buying up smaller ESG funds to get their piece of the pie. I think the number of options are going to continue, but that means investors are going to really have to do their homework, look under the hood and see what ESG means, whether it's just taking one G factor or whether it's the renaming of a fund without a change in strategy, or really are they engaged in a way that is creating real world impact. So I think it's going to get more complicated for investors in every place to look at it. I also think that investors will be looking to reduce their risk. And again, one way to do it is to get out of dying industries like coal and other fossil fuel companies. And then perhaps there will be talk about pandemic proofing your portfolio. So there has been a lot of conversation recently about how the social factors have been harder to get a handle on and assess for some companies. And that's really come to light during this time on how companies are protecting its workers. And then also, I think that on the environmental factor, if you look at how coronaviruses start and the encroachment on habitats and interactions with wild animals, that there's ways that investors can increase their protection by dealing with deforestation risk in their portfolios. That's something that Green Century has been particularly active on, and I'm hopeful that more investors will look at getting involved in issues like that. And then finally, I hope the tipping point continues to accelerate so that there are more options for investors and more authentic ones going forward.
Great thoughts, Leslie, and it's great to speak with you, and keep well. Thank you.
Thank you. Thank you very much, Daniel.